Did you hear the sound today? No, you didn't, because something happened with the microphone or I pressed the wrong button. And the recording that I made mid-afternoon, there was no sound. So we're going to do one here at the end of the day and look at some examples about charts being created by traders' beliefs and expectations with money. Today was a good example of that. So let's take a look. Let's get rid of this. So we always look at the broader markets, and we start with what happened in the past. So the markets have been pretty erratic, whipping up and down, whipping up and down. And there's wide range bar on this day, the 13th, up, and the day, well, yesterday, prices closed near the high of the day. And you can see the 5-minute chart was chopping around there for a little while. And then prices gapped down almost below the low this morning, which is a little bit of a shock. So with a consolidation like this, a wide range bar, sideways bar, what we call a correction bar, traded under a prior day's low and closed near the high. So this little setup in of itself would suggest prices are going to go up, and they did follow through yesterday and close strong, which set up the stage to continue to go higher. Yet prices gapped lower and below started this waterfall to the downside, and then things chopped around, a little retracement. You can see the 65-minute chart. The breakdown under support, it held this minor support, and it just kind of ground its way up there this morning or this afternoon. So as we look around what happened, we covered pre-market that the transports had reached their destination up at resistance and were pulling back. And so now we wait to see the price is going to step in at this minor support level. Can prices regain? NASDAQ 100 got a little extended, but I say a little extended, but it started from this consolidation that lasted a few months, and it was gap down reversal, gap down reversal, gap down, and retracement. And so now we got this bottoming tail bar today, and we'll just have to see, does it want to follow through tomorrow, or was today enough to disturb those expectations where there's a hesitancy to follow through tomorrow? And we'll see. If it gaps up tomorrow above this high, I think it's going up. And if it gaps down tomorrow, well, depends on how much it gaps down. But now that we've got this little support area, this becomes pretty important to hold on a short-term basis. SMHs is moving up toward this unfilled gap there, so that's coming into support. Now, as we look around, so one of the things I wanted to cover today, and I did, and you'll remember the chart, is XMTR. And so this was another stock that was bottoming out. It started here at a gap down reversal. Remember that, a lot of things that were doing really, really well. The market had this little correction at the end of last year and then bottoming out, and some things went up more than others. But as we look at the chart, gap reversal, moves lower, gaps up, and closes strong. So the concept that we call bar by bar analysis is one we're going to be doing an MT Live on that next Wednesday at 12 o'clock. So check that out. But as we apply this bar by bar, it tells us that buyers are stepping up on gap downs and things rallying into near the end of the day. And when it pulled back here near that bottoming tail bar right there, they went up again. And then it consolidates here. So the expectations are growing that it's going to continue to move higher. And so all they needed to do was trade above this high, and would have brought in additional buyers, because those that were a little hesitant here, and it's just going sideways, but no real damage done, as it takes out that high, this pattern communicates that more buyers would come in and prices would go up. And this would create potentially a big move because of the move down, the sideways correction, the bar by bar as explained, and then it takes out resistance and it goes up. And ideally, if the market's going up at the same time, things are firing on all cylinders and we get a nice move. Well, clearly that didn't happen. Markets gap down. This opens up, a little bit down, not really a big deal. And then as the market begins to move lower, long traders say, hey, what the hell happened? This is not what's supposed to have happened. Expectations are going out the window, meaning, well, what I thought was going to happen isn't happening. Let me get out of the way and reevaluate. And that fed on itself, and it just continued to move down throughout the day and created this big down bar. So, bar by bar analysis. Well, it starts with, like every trade does, looking at the chart, is, well, what's happening here? So now we got a trading range that's beginning to develop. We have failed expectations based on what was explained already. Now we've got a big red down bar, which would suggest it's going to come down here. Well, that's what it suggests. What if tomorrow, if you could imagine, it opens up down here and you get a big green bar and it closes near the high of the day after opening down there? This is what we call a bullish 180 reversal. And the move down and the immediate reversal would be a sort of a shakeout. Why did it happen? Who knows? And almost who cares? If we got a big green bar, we now have a new pattern confirming that traders, institutions bought the dip. This was a hiccup, maybe just because of the market. Everybody nervous, gets out of the way. Why? Tariffs, Ukraine, all the other things that the markets are always worried about. And now those expectations, whatever happened the prior day, evaporates, something new happens and brings in the buyers. But as chartists, we just see this big wide range bar, bullish 180 reversal. It's a new setup at that point. Who cares why it happened? So we'll see. If it collapses and goes down tomorrow, well, that certainly could be something in the cards as well. I don't know what's going to happen right now. It's just a pattern that has failed to follow through, and it's nothing for me anyway to do anything about. Now, this did well today, and then if you go back and you look at the video with no sound, if you want to spend a few minutes, you'll see I pointed this out at the end of the day because it was pointed out to me in the green room that, hey, here's a setup. And so we've got this real estate ETF that's been basing here for a while. It had a gap down in reversal. It went sideways, and now it closed strong. So if it can take out this high, let's be a buyer looking for this to go higher. And we could look at stocks within there. And I click this, it loads the stocks within the ETF. And this is something that looks pretty good. It's near this topping tail or pivot there, but it looks like it could go higher. This one is right there. It doesn't have to go much higher. Just take out the high and go up. So what we call a top-down approach. We look at the broader markets, what they're doing, look at sectors. Right? These are the S&P sectors, what did well on the day, what did poorly on the day. So this is a negative, sort of a negative for the markets because this was doing relatively well, holding up, and buyers stepped in. It was at resistance, and now it had a big, ugly down day. So with financials showing a crack in the armor, well, that pulls a leg out from under the S&P 500 that has a big influence on it. Again, we could look at what did well within the sector, dead cat bounce, what kind of got killed, failed expectations. JPM was strong. Buyers are in control. They're expecting higher prices. And now what the hell happened? Close on the high, little resting day. It breaks down. People hit the bid. Wide range bar down. Morgan Stanley, big wide range bar down. Goldman Sachs, the same. And so on. Bearish 180 reversal. So with financials looking pretty bad, like they can go lower, and that's not good for the S&P 500. Consumer discretionary, holding on there for the moment. Industrials, sideways chop. Communications, kind of a buy setup. Nothing great there. Staples, little value investing or defensive going on there. Walmart had a big crack today. Well, what did good? We sort it the other way. Smuckers, bottoming action. put spread candidate, maybe a little consolidation here, goes higher. Tyson Foods. And so money is rotating into the dogs. Right? Call it value, undervalued, whatever. Money is rotating into the dogs, the junk, right? Looking for it to go higher. Um, Utilities, maybe they'll break out. Healthcare coming back a little bit, just not an attractive pattern. Energy moving up toward resistance and KRE, and gold, right? Consolidating, but up on the day. Let's sort it again, update it, GBTC. So not everything that is up on the day and did well will have a chart that looks attractive. Like this quantum, Defiance quantum, above the high, it should go higher. So what I'm going to do, I'm going to set an alert there, and we'll see if it moves up tomorrow. So flipping through a few of these, marijuana just terrible, terrible, terrible forever. So I hope that helps. Look at the charts from the point of view of what they communicate, what others think. Forget about the haramis and dark cloud covers and trend lines and all of that, and just look at the trend up, down, sideways, bar by bar, and see if we get a pattern. If you have questions, email us, Greg and Dan at Master Trader.